Come on, don't lie. Whenever you think of assets to invest in, the first thing that comes to mind is either food companies, automobile companies, computers, crypto, etc. But what if I tell you that the biggest asset class in the world is actually real estate, which makes billions of dollars in revenue per year? Sounds interesting? Well, there's more to come. What's good, you guys? This is Market Thrive, and today, we're going to talk about how Latch's products became the next big thing in the real estate industry and if they could sustain their momentum in the coming days. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. Recently, Chamath oversaw the PIPE investment in SPAC or SPAC that is joining forces with a business called Latch. The SPAC is still trading under the ticker code TSIA and has not yet merged with Latch. Now let me explain why Chamath is investing in Latch before you look for this stock or have any preconceived thoughts. The stock was the best software as a service company he had ever seen or invested in, according to him, and is for a few important factors. Despite the stock's rapid increase even throughout the pandemic, it has largely escaped public notice. It might be difficult to find and keep tenants at times. For instance, real estate managers must regularly conduct tours to potential tenants while they are hunting for tenants. This can take a lot of time, especially if you are in charge of a sizable number of real estate units. Through the products it offers, Latch seeks to change this. The company's business strategy is focused on making renting and renting out properties a better experience while at the same time increasing profit margins for property managers. The items from Latch's R, M, and C series are its most well-liked offerings. Users can open their apartments using the Latch app, an Apple Watch, a key card, or a door code with the $400 upfront cost of the R series product, also known as the R Reader. I'll address this later, but it's going to be really crucial. Although each product in the M and C series is unique based on the door lock, they each serve roughly the same purpose. Both of those items are safe doorknobs that document people entering and leaving apartments using photos and videos. The fact that you must essentially allow access to the Latch app to a potential tenant when you invite them is the main reason why this is so crucial for property managers. The potential tenant will then be provided with a door code to access the flat after providing their email and the date and time of their visit. Compared to offering potential renters who might not even be interested in this property a tour of the unit, this is considerably more practical. Additionally, property managers are spared from having to continually produce new keys each time a new tenant takes the place of an older one. Because the keys can be copied and former renters might still have access to residences, real estate managers take this precaution. Real estate managers are no longer required to do this with the Latch door handle. Because it generates recurrent income, Latch's business model is quite robust. The cost of installation for both the M series and the R Reader is roughly $400. Following the installation of those two devices, consumers must now purchase a Latch's software service contract, which typically costs $5 per door. As I'll explain in a moment, this is crucial for future development. Utilizing Latch is a smart choice for property owners. Latch OS decreases expenses by $100 to $300 per year while increasing revenue for flats by about $200 to $500 annually. Latch provides a premium experience, raises rental rates, provides security, and lowers rekeying costs, which are the main reasons for this. It almost seems like no-brainer for apartment owners to use this service with these astounding numbers. This is starting to become clear to Latch owners. In fact, as of 2019, 1 in 10 of all brand new multifamily units constructed in the United States used Latch services. Latch's ecosystem also includes other features such as the Latch Intercom, which enables communication between apartment owners and tenants over an intercom and vice versa. The Latch Camera, which enables property managers to monitor communal areas in an apartment complex, and the Latch Delivery Helper, which makes it simple for large units to manage incoming parcels. The Latch app allows you to control all of these gadgets as well as extra capabilities like controlling thermostats. Latch also has plans to add more services to its app, like Wi-Fi control and insurance. Like a firm like Tesla, Latch's software will only develop better and better for its users. Now that we are clear on what Latch is, let's look at the reasons why Chamath thinks the company has a ton of potential for growth. The four main elements that support Latch's growth prospects. The first one is the sizable market for an operating system for apartment buildings. Second, Latch is developing a comprehensive operating system for building technology. The third, which is Latch's incredibly alluring bespoke appeal and client retention. Last but not least, there is a considerable amount of room for Latch to develop quickly. Latch has a ton of room to expand. To put it another way, Latch has not even penetrated 1% of the market for multifamily housing, despite the fact that there are 47 million rental properties in the US. 15 million single-family rental houses and 32 million apartment complexes are also included in this. If you include Europe, the market for Latch's services has an annual revenue of $54 billion. The fact that Latch's services are already available in 35 US states and will only grow from there serves as a stark reminder of the amount of disruption that still has to take place. It's understandable that Latch has been expanding quite quickly given its tremendous potential. From 2018 to 2020, it booked a 413% gain in hardware sales, while a 546% growth in software revenue. In addition, since Latch is already utilized by over 300,000 housing units, the total number of booked home units is growing at an ever-increasing rate. The fact that Latch has so far been able to keep all of its clients is even more intriguing. You can see that Latch has a 100% gross revenue retention rate, meaning that no customers have decreased their Latch plans. Their existing clients' netbook revenue expansion ducts were actually expanded by them. For a few key reasons, this rapid expansion is happening. As reservations with new clients are increasing, the first one was 154%, demonstrating that customers are still utilizing Latch's other advantages. The expansion of existing clientele is the second thing to make. Third, Latch software is growing, which generates more income. Also, expanding in the most recent app are the income services. The fact that Latch intends to quicken its expansion in Europe with SPAC partner Tishman Speyer is another significant growth driver for the company. The business will benefit greatly from this. A total market size of $90 billion is available for Latch because there are 93 million apartments in Europe. The fact that Latch can benefit from his collaboration with Tishman Speyer is the most intriguing aspect. It is in Tishman Speyer's best advantage to employ Latch's goods because they are the market leader in this area. Latch will grow into a vast global portfolio of properties owned by Tishman. This includes 80 million square feet of space and global assets valued $56.8 billion. Latching onto these apartments is essentially a piece of cake, given that doing so is in Tishman's best interest. We need to look at Latch's valuation now that we are aware of its rapid growth and sound business model. Revenue at Latch is anticipated to rise by 51% in 2023, 38% in 2024, and 25% in 2025 year over year. We already spoke about how Latch's international expansion and its partnership with Tishman will fuel the company's incredibly rapid growth over the coming several years. Latch trades are only $12 per share at the time I'm making this video. This is a 20% increase over Chamath's original investment in the business. Latch is now valued at around $1.9 billion. A $1.5 billion valuation was given to the area. Just to be clear, if you invest in TSIA, you will be also investing in Latch when the ticker symbol changes. A firm predicted to expand this quickly in the upcoming years has a price-to-sales ratio of 11, which is unusually low at this level for Latch stock. A clear path for Latch to 2 times in 2 years is provided by this. The same equations may also be used to determine that Latch will have a clear route to almost 4 times its value in 4 years if the 2025 price-to-sales ratio is set at 4. In my opinion, this is very attractive. However, you should always conduct your own research. You should keep in mind that this is a growth firm and that margins are not anticipated to turn profitable until 2024. So this is most definitely not financial advice. Latch anticipates losing $60 to $120 million per year between 2020 and 2023, excluding taxes, depreciation, and amortization costs. So, thinking about investing in real estate companies to maximize earnings? Then Latch is definitely an asset you should research if you're seeking a growth firm with good prospects relative to its valuation. Feel free to jot down your thoughts in the comments section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.